made it not only to my podcast, you made it till Thursday. It is Thursday, August the 12th. I'm your girl, your host, Shirley Nichols. It's Mortgage Money with Shirley time. Yes, you all made it to the podcast. So please feel free to tag, share, invite all your friends, all your family, all your co-workers, relatives, enemies. We take them too. Yes, just invite everybody, share, tag, and invite to this video, to this live streaming. We are streaming live from the Morris Media Studios right here in California. And feel free, like I said, to leave your comments, questions, concerns. You can tag your friends in this video, share this video, do everything you need to do right now, because we are streaming live right now. So again, you're on Mortgage Money with your girl, Shirley. Mortgage Money with Shirley. We are on episode 10, baby. Episode 10, we're talking about bill consolidation, debt consolidation, and your credit. So again, I thank you all for signing in with me today. It's Thursday, and it's a bright, wonderful, great day to be here with us. So join in, ask any questions, comments, or concerns, or you can go ahead and call the studio live. We are at area code 323-815-4204. Excuse me, 323-815-4204. So like I said, any questions, comments, or concerns, or if you want to call in right now in the studio, I'll be here, but I won't take your call during this live until after the end of the show, okay? We're on for about 25, 30 minutes. So again, thank you and welcome. So let me just give you a little bit of background about me. I am, again, Shirley Nichols. I've been in this mortgage lending arena for over 28 years. I did say 28. I know. Go ahead. Thank you. I know I look 13 and all. No, but thank you so much for being here with me. I've been in this business for over 28 years. I absolutely love it, in case you didn't know. Oh, and like I said, I sometimes forget, but let me go ahead and put this out there. My NMLS number is 105989. Again, my NMLS number is 105989. And we should be calling that number out with these podcasts so that you'll know that I am licensed and certified to be talking to you about what it is that I know and I can share with you. So again, I hope that you do get a little bit of something from these podcasts. I'm on about twice a month. Again, streaming live and just wanting to help and educate those that need the help or the education that may not know what they're getting into when they buy a home, or they want to refinance a home, or if they want to tell what they know to their other friends and family. So if this show works for you, please pass it along and maybe I can help someone else. At the end of the show, I will give you my direct cell phone number. So in case you want to talk with me offline, or if you don't want to have the comments in the comment section, that's totally fine. I am available, and my cell phone does work. So at the end of the show, I'll give you my cell phone number as well, okay? So again, let's go ahead and jump into this. Again, you know how long I've been in the business, and I work with Clear Sky Mortgage and Realty. Clear Sky Mortgage and Realty right here based in Los Angeles. So that's what I do. I'm a mortgage broker. So about this debt consolidation, right? This bill consolidation. And it's the summer and we're all doing this vacationing. If you follow my personal page on Facebook, yeah, I've been doing some traveling. But so we're doing this traveling, you know, as some of the COVID restrictions are starting to lift. We're getting out a little bit more frequent, and we're traveling farther out, and we're racking up bills, right? Some of you are, some of you aren't. But if you are in that category where you kind of put some traveling expenses on a credit card, or if you're going back to school and you've put some back to school clothes on the credit card, or whatever it is that you're doing, that you have, you know, started to build this credit debt and that you want to get out of, might I encourage you, look at refinancing. Yes, interest rates are still very, very low. Okay, they're still low. And I get this question from time to time, you know, from not a lot of clients, but I still get the question, so I still want to address it. Can I refinance, Shirley, and pay off all these bills and get one payment? Yes, yes, yes. You know, as long as you're qualified for a debt consolidation loan through a refinance, I highly recommend it. Here's why. From back in the day, it was really, really prevalent that a lot of clients would use bill consolidation companies, right? Some of the names kind of elude my memory. But back in the day, when I got started in this business and a little bit after, a lot of clients were using bill consolidation, debt consolidation companies to combine all their bills and give them one payment. That was the thing back in the day. I mean, that was like the trend. That was the hot TikTok, right? So back in the day, they did this thing. And it struck me as like, whoa, a slap in the face when about a week ago, a client had a debt consolidation company paying her bills, right? And then so she came to me not to pay off the bills, but what she wanted to do was refinance her mortgage into a lower interest rate. And what happened is when I pulled up her credit report, I do that. I will pull what we call a tri-merge. That's all three of the bureaus. That's Equifax, Experian, and TransUnion. All three of these bureaus I pull when you ask to get qualified for a refinance or to purchase a home, right? So I pulled her credit report up, and the first thing I saw was debt consolidation bill with XYZ company. And the sad thing about it is that bill was on her. This company got really smart because back in the day, most of these debt consolidation companies didn't put their company name and the amount that you owed and the payment. Most companies didn't do that. Back in the day, they just had your Macy's, Discover, American Express. They still had them singled out, and the payments would be showing up late. But in her case, she had this one big consolidation loan, bless her heart, with this one big balance and this one payment. And then she also had all the bills that were in this debt consolidation loan. She had all the bills single filed in this report. And guess what? They were delinquent. They were delinquent. You want to know why? Well, when you get these debt management or bill collection or consolidation loans, these debt management companies, they have your debt, Sally, Jane, Mary, Melissa, Todd, Susan, Mike, John. They've got everybody's credit that they're trying to consolidate and send those payments to the various companies that they owe. But what happens is that because they're sending out payments all over the world for all these different clients, they're on a cycle, right? So you might have from, what is this month? August. On August 10, all the payments that go to Citibank go to Citibank. Then on August 11, all the payments that go to Sears, right? But it's everybody who has a Citibank payment. They go in this one bucket. And if your due date was August 9, and because you didn't make that July 9th payment, well, when they pay it on August 10th, when they send out those bills, and mind you, Citibank has to get the bills and post them, so that's another couple of days added. What happens is now you have a 30-day late on your bureau for that Citibank card because you've started a cycle of it being paid 30 days late, right? You failed to make that July 9th payment, and oh no, I'll just get it in before August 9th, but the debt management company doesn't send out Citibank payments until August 10, and then Citibank doesn't get it or post it until August 15th. Well, guess what? You're now 30 days late because it was due July 9th, and you didn't catch it by August 9th. It didn't get posted to August 15th. So guess what? Now you've got this 30-day late on your bureau. Yeah. And that's exactly how these debt management and consolidation companies work. They're not going to take the time out and send just one client Sally's payment to Citibank. They're not going to just give Sally the privilege when they've got tens of thousands of other clients that have a Citibank payment too. They're not going to just pull Sally's payment out the batch and say, oh, let's hurry up and get it over to Citibank before she's 30 days late. No, you're all going to go in this bucket and they're going to send it out at one time, regardless of your due date. So when you think about these debt management companies, like I said, when I first got started in the business, I mean, they were everywhere. ABC debt management, ABCD debt management. Everybody and their mama had a debt consolidation company just to get you zoned in, honed in, and they would take care of your bills for you. So Be very, very cautious when you're thinking about doing a debt consolidation company with a management company, because they're going to manage your finances, and John and Mary and Susan and David and Rocky and da-da-da. They're going to manage everyone's money, right? For a small fee. And that small fee is going to accrue interest and fees that accrue and accrue and accrue until you've got that one lump sum paid off with them. So how's about I paint another picture for you and show you what if you just simply refinanced? I know what the closing cost, Shirley. Well, didn't you just pay this debt management company fee after fee after fee after fee after fee, and they marked your, well, not them, but your credit still was in shambles because you kept getting these delinquencies? Isn't that what they just did? But they did it poorly and negatively on your credit report. So how's about just refinance? And closing costs are a one-pop shop. You pay closing costs one time when you refinance, that's it, you move on. And guess what? Your bills are paid off. There is no, oh, I'll just keep paying this debt management company until this one lump sum is paid off and hope they get them there on time. No, when you refinance, we give you the checks to pay off Sears, Discover, Macy. Escrow will give you the checks, Sally, and we'll just use Sally as a word today, as a name today. But the escrow company is going to give you a check, Sally, made payable to Citibank, right? To make sure you get Citibank their money and not put it in your bank account. Ooh. So again, I will encourage, if you have debt, if you have bills, if you have credit card, if you have travel expenses, if you have back to school clothes, if you have any expenses that you're using, right, on credit cards, I encourage you, look at the credit card interest rates. I don't know, I'm just going to throw something out there. On average, they're about 22%, unless you're doing something with American Express or Discover and they've offered you a promo introductory interest rate that's going to expire. How's about get with a refinance, call your broker, and do a refinance, get one low interest rate, and I do mean low because there's, even with the consolidation, the rates are still under 3%. Guys, the rates are bananas still, okay? So how's about do a refinance, right? And get yourself a low interest rate under 3%, consolidate all those bills, right? And save money and save your credit. I'll give you a true life example, a true scenario. This happened just last week. 20 credit cards. That happens, yeah. It happens, right? But those 20 credit cards, combine them into one. You're paying 20 different amounts of interest every month. No, get one amount of interest, combine them, and save your credit, right? Save it. Now, I know some clients are thinking, but, you lenders are real particular. When we get these debt consolidation loans, you want us to close those accounts out. Not always. And remember, just because, and I'll throw something out there, just because Quicken/Rocket Pro told you have to close these credit cards out, we're not going to keep this open, then maybe you should try with another company, UWM. Maybe you should try with another company, Wells Fargo, Chase. Try with another company. Just because one company said this is what you must do, that's not always the gospel, okay? Not always. And I'll tell you something else. It doesn't take long to do these refinances. Yes. I think another thing, clients have a lot of concerns and questions. Pick up the phone, call your broker, and let's talk about it. It doesn't take long to refinance. You probably will qualify when you think you don't. We'll save your credit so that, right, you're not sending out to a debt consolidation. And who knows, you might even get some money back in your pocket to do whatever else you need to do. Take that trip to wherever, Bora Bora, right? Go ahead. Think about these refinance options, guys. And their rates are just there for the picking. Seriously. Speaking about refinances, if you have a VA loan, right? If you're using your VA loan and you have a VA loan right now, your current mortgage is financed through the VA, yes, you can do a VA cash out. Oh, imagine that. But what's even better is you can do up to 100% of the value of your property on a cash out VA. And the reason why that is so huge right now, is because that was unheard of a couple months ago. Really. They just changed that guideline. So if you are in a VA mortgage loan right now, you're thinking, I like to, put a swimming pool in my backyard. It's still hot outside. I want to keep, socially distanced from everyone else and build my own pool. You want a pool in your backyard? I don't know, maybe you wanted to do some landscaping in the front yard. And maybe, yes, you have bills that you want to pay off on those high interest rate credit cards. Do a consolidation, a cash out refinance, and you VAers, guys, you're winning 100% of the value. So yes, if your house is worth $500,000, your loan can be $500,000. And we'll take out whatever is owed on the first mortgage and give you the rest. Now, it depends on what your debt to income ratio is. Your debt to ratio is, of course, and your FICO score. But again, call me. Let's talk about it. Instead of sitting out there thinking and wondering, no, let's talk about it. Another refinance reason, as to the reason why you want to refinance, if you have a current FHA loan right now. And I hope my client is watching that we just did this for. Oh my gosh, it was the most amazing FHA scenario that I had. And the reason being is this, guys. And I'm going to speak more specifically with LA County. Oh my gosh. LA County, Los Angeles County, right here in California. If you are living in LA County and you have a home that is financed with FHA, please call me. Please give me a call so we can talk about it. You won't have to carry that PMI, that private mortgage insurance, probably anymore. Call me. Let's talk about it. You know why? Perfect case scenario. Like I said, I hope my client is watching this. But bought the house 2 years ago. Did the mortgage loan 2 years ago, right? FHA. Did an FHA streamline. And that's another thing you can do. You don't always have to do FHA into a conventional. You can also do a streamline, drop that rate, drop the payment. You can also do that. And guess what? Sometimes you can skip 2 monthly payments. Oops, did I say that? What'd you say, Shirley? Sometimes you can skip 2 monthly payments. If we do it right, if we plan it right, if we strategically move the way we need to move, you may be able to skip 2 monthly payments on the mortgage by doing an FHA streamline. Call me. Let's talk about it. But if you don't want to do the FHA streamline, which is totally all right, what I was saying is this one client purchased the property 2 years ago. 1 year later, we did a FHA streamline. It's actually 18 months later, we did a FHA streamline. And then 6 months later, barely 2 years later, he's going from an FHA loan to conventional. Now, how do you do that, Shirley? Well, check this out, right? Specifically, and I can only speak on the experience here in Los Angeles County, where I do the majority of my work. Like I said, I am licensed to do business here in California and Nevada, but the majority of my clients and the work that I do is right here in Los Angeles County. And the property values are just booming, 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 booming. As well as the inventory to purchase a house is going whoop, 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 whoop. I mean, inventory is dismal, very dismal here in Los Angeles County. But nonetheless, that's a whole nother topic. We'll talk about that another time, another show. But back to this FHA refinance going into conventional to get rid of the PMI, the private mortgage insurance. And that's why a lot of clients tend to want to get out of their FHA loans as quick as possible, because you are paying one portion of that mortgage payment goes directly to PMI, private mortgage insurance. That does nothing for the homeowner, does everything for the lender, right? So you're paying insurance, kind of like you pay car insurance, but you're paying insurance on the mortgage so that in the event, which we never want to have happen, but in the event you decide that you don't want to make this payment and you don't want to sell your house like you should, in the event none of that takes place and they have to foreclose on the property, that PMI definitely handles everything. I think I got a caller calling in right now. But caller, if you are looking at me, watching me, I'll call you back after the show. Okay. Or call back in the last 5 minutes. The last 5 minutes of the show, I'll open it up for clients to call in, questions, concerns, all that kind of stuff. Okay. Nonetheless, my client, from FHA to conventional in less than 2 years, guys. If you're so concerned and worried about, oh my gosh, I won't afford a house that I want to buy, I won't qualify because my income and blah, 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 blah. A lot of clients will use FHA. It is easy, guys. And I know some real estate agents will tell you, oh, we don't want to work with the buyers that have FHA lending. FHA is a government program to protect you, the customer, the consumer, the client, the homeowner. That is what FHA is designed for. But it gives you the parameters, right? The flexibility, right? So that you don't have to have a low debt to income ratio. And if you catch my previous podcast, you'll hear me talk about and discuss what debt to income ratio is, DTI. You don't have to have a very low DTI. You don't have to have a whole lot of income or a whole lot of reserves. FHA works tremendously for a lot of first-time homebuyers and existing homebuyers, right? So what I'm saying is, when you get into these FHA loans, you get in them to buy your property. Okay? Let me say that again. You get into these FHA loans to purchase your property. It's 3.5% down payment versus if you go conventional, right? It's 5% down payment. Okay. Some conventional loans, yes, we do have those loans that are 3% down payment, but the majority, where you want to live, the type of house you want, the majority of these conventional conforming loans are 5% down. Okay. Versus that same property being 3.5% down, but you do have the PMI, the private mortgage insurance. Now, don't get me wrong. When you do conventional and you put 5% down, you will have mortgage insurance just the same. It's just that mortgage insurance tends to be a little bit lower, a little bit cheaper, but that's okay because it all comes out in the wash, right? You get your property, you get your property, you get a property. But if you purchase with FHA, guys, don't get discouraged. You don't have to stay in the FHA loan long if you don't want to, especially here in Los Angeles County. These values are going up quickly. So my client who purchased 2 years ago, here it is barely 2 years later, he's going from FHA to conventional. Now, how you do it, Shirley? Well, this is what happened, right? We ran an application. We did, And all the while, I was a little, I'll admit, and my client will tell you too, I was a little skeptical about what the value would do. Right? A little skeptical because you do need 20% worth of equity in the property to get rid of the PMI with FHA. And I know back in the day, I was there 28 years ago. Back in the day with FHA, you could either do a 15-year note and not have the PMI, or you could get about 21% of equity and do away with the PMI. Now, 2021, with FHA, there is no getting rid of the PMI. If FHA is the loan that you have, whether you have 20% of equity, whether you have a 15-year term or not, if you're in an FHA loan, you're in an FHA loan with PMI. So most of the clients want to refinance out of that, right? So this client, again, barely 2 years later, the whole while I'm doing the application, I'm thinking, oh my gosh, he's not going to have that 20% equity. Oh my gosh. Well, guess what? True story. Happened last week. We had a mechanism when we're doing the application. There is what we call desktop underwriting. Okay. It's an automatic underwriting approval mechanism. It's a software. It's an application that we run everyone's loans through. And guess what? Lo and behold, guess what happened? You won't, I'll tell you. He got an appraisal waiver. What we call a PIW, property inspection waiver. PIW. What did you say, Shirley? I said a PIW, property inspection waiver, is what he got. And what does that mean? He didn't have to do an appraisal. No one had to show up at his house. No one came by. No one knocked on the door. No one came in, took pictures. No one did any of that. Are you serious? Yes, I'm very serious. Happened last week. We're closing this week. Yeah. So what I'm saying is this, and caller, if you're looking or listening, I'll call you. I'll get your call. I know it's almost 5 minutes to the time we're going to stop. I promise I'm going to wrap this up, and I'll take your calls. But what I'm saying is this, guys, do not be afraid to call your broker in the event you want to leave your FHA loan into a conventional loan. You probably have the 20% worth of equity in LA County anyway. You probably got it and don't even know it. I didn't even know it. We just did his loan 2 years ago, okay? Had no idea that not only is the 20% worth of equity there, we don't even have to have it appraised. Yeah. So that is a real true scenario, guys. Sometimes when we're doing these applications, we'll run it through desktop underwriting. We'll get an automatic approval that says, oh, and this client is eligible for an appraisal waiver. A PIW, property inspection waiver. They're eligible for that. No appraiser has to show up, no nothing. And you can close your loan. And like I said, it's not taking 30 days to close loans, guys. How about 10 to 12 days? Call me. I can't stress it enough. So I say all that to talk about, again, consolidate. If you can, you've got the equity and you are eligible. Think about these things before you end up, all of a sudden, I think I need to file bankruptcy, and we'll talk about that on a later show as well, because forbearance on your mortgage right now, it's not negatively impacting your credit report per se, but it will put a jolt on refinancing, okay? I had that question come up. I had that issue come up last week as well about forbearance on your mortgage, and you're not paying your mortgage payment. You're not going to get evicted or foreclosed on. I'm sorry. You're not going to get foreclosed on or anything like that. And your credit report's not going to really, take a hit. But if you want to refinance, we'll have to discuss that. It causes a little bit of a jolt. Okay. So just know that. But consolidating your credit cards, guys, if you are eligible, do so. If you're on an FHA loan, think about conventional so you can get rid of that mortgage insurance, right? VA, again, 100% cash out right now. Yes, 100% of your value. Need any extra cash, do you? Okay, well, listen, like I said, I wanted to open up the last few minutes for comments, questions, or concerns. If you have any questions, comments, or concerns, please go ahead. Feel free to give me a call here in the studio for the next couple of minutes. We're at 323-815-4204. 323-815-4204. Feel free to call in for the next couple of minutes or so. And if you don't want to call in, understandable. Call me on my cell phone. And I'll give you that number now. It's area code 818-720-7575. That's 818-720-7575. Again, you're on with Mortgage Money with Shirley, and I'm here twice a month. I like to say we're on Tuesdays around 12 o'clock. But sometimes my days kind of change, okay? But nevertheless, you'll get me twice a month right here in Mortgage Money with Shirley. Like I said, we're at episode 10, so there's 9 other episodes, including this one now, 10 episodes that you can watch, share with your friends. We're on YouTube under Mortgage Money with Shirley, or also in the Morris Media Studios, okay? So feel free, or even look at my Facebook page. It's my personal Facebook page, Shirley Nichols, my business page, Clear Sky Mortgage and Realty. You can also look back and scroll down and see some of the other videos from the other podcasts. But again, I hope I've helped a little bit, brought a little light, a little shine, a little light on some of the questions and topics that you might want to discuss. And I hope you enjoyed yourself. Again, it's Mortgage Money with Shirley. And if I don't see any comments or hear the phone ringing, of course, the cell phone was going off, so we'll get those later. But feel free to, like I said, get a hold of me, and I'll be here to talk with you and answer your calls and questions. So anything else, I hope that you have a great, prosperous Thursday. Be blessed, and I'll see you next time.